What is up, everybody? Another series in a quick analysis, quick technical analysis series. We have Bitcoin Cash today. All right, and this comes from the smart money view of how to trade. All right, so if you don't know about smart money, quick rundown. Uh, Everything is an algorithm. There is no such thing as buying and selling pressure. Everything is an algorithm, and the algorithm seeks to balance, and it seeks liquidity. Those are the two things that it seeks. Um, Everything else that you've been taught or you have been, you know, whatever, in retail theory, like so using such as trying to trade off a trend line or bear flags or trading a triangle or using harmonics of a deep crab or any of that kind of stuff that you've been taught so far, even such as like using a channel. um, just take a couple minutes, throw that out the window, and just let's just try to learn something new. All right. Smart money basically means institutional money. It means that the institutions, the algorithm is for the institutions. There's somebody well, at least a computer program probably controlling the algorithm, and they they as the institutions know it pretty well. They know it well enough when to get in, when to get out, when to push it, because if they do have the power to, I wouldn't say there's no buying or selling pressure, but I would say there's very minimal, because they know when the opportunities are going to come, um, just from the algorithm itself and knowing how to study it. The idea came from Forex. However, it has been tried on commodities. It has been tried on, uh, futures, indices, whatever you can think of, it has been tried on, and it is proven to have worked. So I have been doing a series on it, checking it out with different cryptocurrencies, and so far, a lot of it has, kind of came, I wouldn't came true, but it basically the theory has been followed. A lot of the things have been happening. If it hits an order block or if it hits a fair value gap, and I'll try to teach you these along the way, um, then it does react the way it's supposed to react. So the only thing is I hate to tell you, but doing this was, I thought Bitcoin Cash, because Bitcoin Cash had a big run there for a second, and it's still at a really really good price. I mean, for what it is. And I'm sitting here hoping for another run. Looking at this, trying to do the analysis, looking for a breakdown, and hate to tell you, but it's kind of boring, little boring. But we'll get through it. We'll get through it. Okay. Um, Let me sit here for a second. Let's throw on some sexy music. Why don't we? While we do this, you guys like sexy music? There we go. Got it going. All right. At least I hope you can hear it. Actually, these headphones, they're not plugged into anything. They're just for show. No, I'm kidding. They're actually plugged into my Blue. I just unplugged it really quick. Anyways, we're gonna move on to the charts. To the charts, shall we go? Okay. I'm gonna take myself out of the way so I'm not in the frame and blocking everybody's view. But we're not gonna make it to this point just yet. This is where I was when I stopped. We'll probably make it in a little bit deeper than that, but we are going to back out to the monthly. Yes, the monthly, because we got to find out where it all started and where we're at now. So check it out, the monthly. You can see this thing has a really high price as far as an all-time high, at about 4,300. So that's like, you know, Ethereum high type price. Then we have the second monthly high here, just below 3,000. Not for sure where Ethereum is right now, but it's hopefully somewhere around there. Jeez, I hope it is. Then we have, I had to mark the third monthly high because, you know, these are eventually targets we're going to aim for. And with the current Fibonacci that we have right now, which we're going to get into eventually, it's close to about 4x. That third monthly high is very close to 4x. So when you have something that coincides like that, that's a pretty good sign. I would say that's a pretty good sign. So that's the one hope I do have about Bitcoin Cash here right now. Over here I put some sell side liquidity, because it's interesting. I think when we get the week or the daily, there's a gap in there, and of course there's a liquidity pool right here in the middle, and it just left people for months. You know, nowhere. At least if it was me and I saw this, I would be like, come on now, get above that already, because we know it's going to. Just because a lot of people have their a lot of people would have had their orders sitting here basically. Either they had sell orders because if they thought it got close to it, it was going to sell, or they would have had buy stop orders. So, you know, to try to catch that, you know, try to catch that breakaway movement, that breakaway a run. But as you can see, when it did finally break it, it disappointed everybody. And neither did I. We'll have to get in closer to find out exactly what happened, but it went right through it and then pulled right back down. So it screwed both sides, which is why we look for liquidity pools, right? Liquidity pools are actually extremely important in smart money, specifically for that reason, because we know what retail is going to do, right? Retail is either going to put a sell limit around here, thinking that it's going to sell, right? Or they're going to put a buy stop above these, thinking it's going to buy, right? And then what we'll do as smart money is know that eventually it is going to break it, but watch for the pullback, and then you know you can possibly buy it on the second time it goes through. Or if depending on the formation, you know, if there's some kind of you know 3/4 formation or something like that, you can buy on the pullback, and then you know it's going to try to outrun those highs. So, you know, things like that you try to learn along the way whenever you're learning smart money. Other things to know: fair value gaps. There's one down here. I think probably the only weekly one I found, or sorry, monthly one I found. Yeah, definitely. I think the only, no, I think that's the monthly. Yeah, that's a monthly one. Monthly one here. So, fair value gap, you get 3 consecutive candles. All right. So in between, if you got a gap, you know, in between the first and the third candle and the middle candle, right? What you do is you want to touch the wicks together, right? And basically you're leaving kind of a void, almost like a liquidity void. And what that means is that it will move away from it. But what usually happens with these fair value gaps is it acts as a magnet for price to come back to, because either it wants to at least touch or try to get in the liquidity void to fill it some way, because sometimes it'll only touch just barely part of it and then it'll rock it out, or it'll want to fill it the entire way, and if it fills it the entire way, then it's completely balanced. However, the algorithm remembers it no matter where it is. So that's why I drew it all the way across. And as you can see, even the very last, well, let me pull even further, very last weekly the fair value gap is touching that. It's just barely touching the bottom of it because it was respecting it. boom, respecting that area, jumped to maybe just a little bit, and then exit. So that's a little bit about of what smart money is. Sell side liquidity, of course, if you have a low, you know, especially at the very beginning, generally, you know, it's going to try to attack that low. It's kind of the same as the liquidity pool here, right? Except for it's just on the sell side, right? It's going to try to attack that and attack those anybody that has a sell stop down here or has a buy limit around this area. And as you can see, what did it do? Boom, ran right through it, took out both people, probably because the sell stop people probably wanted it to run away and go lower, but instead it comes back up above it. Probably took out their stops, unless they, you know, took a quick profit. It's about the only way it would have happened. Yeah, that's exactly why we look for sell side liquidities too. And you know, there's one sitting right here, but as you can see, it's so far away, I wouldn't even worry about it. That's why I didn't even you know, mark it as a sell side liquidity. But you know, to anybody's, you know, to the extent this right here would also be considered a sell side liquidity, because it can't, you know, it comes down, you know, and at the end of the month, boom, it pops up, and then eventually it comes down and hangs around that area to where it looks like it could be the new support, but it isn't, and eventually boom, down right through it, comes back up through it, yada yada yada. So that's why you gotta look out for sell side liquidities as well. All right, so now that we've done with the monthly, let's get into the weekly. We're gonna get into the 4 hour probably pretty quick though. Weekly, there was a couple fair value gaps down here. There's one right here. I made them very faint because they're older, right? They've already been broken through and filled basically twice, which means that this area has already been balanced. But the reason I made it faint was because, you know, the algorithm remembers it. So same for this one. This one just got broken though. That's why I made the outline a little bit brighter to see, so we can see that. Nothing else though, until we just had this very large run. But after we had this large run, it came down to, and it didn't cross this. It came down to into these two, down candles right here, bearish candles right here, but it didn't break them, right? These two these two bearish candles are considered, order blocks. What happens with an order block? Well, whenever you see something, two down candles or a down candle or multiple down candles, but then you see, the bullish candles overtake them or engulf them, whichever you want to use, that's how you know that these are considered order blocks. And this one takes out this one candle basically takes out both of the bearish candles. So that's how we know that this is an order block. And basically these candles put together would be considered the, just the bearish candles that are making these, or, confirming that these are the order blocks. So that being said, I haven't done this yet, but there would be a line drawn across the top of that. Generally I do it at the body, but since this is the weekly, I'm doing it at the wick. I may go down to the body once we get closer and see. But generally what happens once it gets to that area is it's expected to hit and then turn right around. Generally you want it to do it as soon as it hits that line, to where the order block starts. But if it doesn't, and if it gets closer to the bottom, these are kind of areas where we look to trade, right? We look to trade off the order block, right? So if it's coming down into the order block and we set our buy limit right here, and it drops all the way down and almost through the bottom of the actual order block, then what we'll look to do is actually move our stop loss a lot closer. But as you can see, it didn't go all the way through, and it did come up out of the order block. So this would have been a confirmation, goodbye, I guess you could say, or a positive buy if you're looking to buy on the weekly, on the weekly time frame. And people do that, especially people that don't have a lot of time on their hands, or to sit around and day trade. They look for setups like this, and then that way they can say, okay, look, I've got this. I know it's eventually going to get down to this point. I can set my buy limit here, set my stop loss here, and then he may have to wait a few months or so. But if he puts in enough money, eventually, he may have a couple $1,000, by 2-3 months from then. So I'm just going to pull that one off just because we don't need really the bottom of it. Now we're going to get into the daily. This is where things get kind of hairy because, okay, so down here we got those weekly, right? So here we finally have a daily fair value gap, right? And then also, I know we had two. I'm trying to figure out, I think I may have accidentally moved one. Oh no, it's just sitting right here. There it is. That peach thing right there. It's kind of hard with all the different colors that are in here, because I believe this right here that wasn't a weekly one, was it? I want to say that was another weekly that I didn't look at. Yes, it was. So that one was because it's the same color as these guys. That's how I know I color coordinate things here. So this one is the closest weekly fair value gap. And like I said, again, they act as kind of act as magnets. They attract price, but then again, they protrude price as soon as they dip in. But then again, they could also, try to fulfill the entire fair value gap. That way, the area is balanced. So now that we're on the daily, let's focus a little more on what is going on right now after the big drop that we had. All right, not many fair value gaps, on the daily. I already pointed those out to you. They're more up above. So we had the old fair value gap. It did dip into, and over here again we have another order block. Of course, within the daily, all three of these are considered order blocks, but unfortunately nothing has actually punched out of it. So you can't expect it to come back to this area if it hasn't came out of it. But this one has overtaken this one and the second one. So with this one candle here, right, being an order block on its own, I drew the line from the order block all the way out. And as you can see, as it came back to the order block, it got inside of it. Also at the same time inside the fair value gap, but it has respected it with the wicks, and the bodies have not gotten underneath that fair value gap, or not. They're that order block, and I want to say that maybe more in the 4-hour range. I am not mistaken. Yeah. So as you can see, you have 4 down candles here. So with these 4 down candles, the green candle just right there, that would technically make this the order block. So that is why I mean, but with 4-hour candles, yeah, you will see some candles that, kind of dip into it and then jump out of it, but they'll hit the order block, and it has respected this order block the entire time since May 23rd or whenever it was formed. And it hasn't gotten below that since, and that's why I said this one would be kind of boring, because there hasn't been anything going on in Bitcoin Cash since then, because one, above it we have these order blocks. Here's an order block here, right? That's one of the 4 hours, and then above that is an hour. We have an hourly one as well. So oops, didn't mean to move that. I can actually lock that into place. So as this is coming out, right, so it dips down below here, takes out this, right? So this right here is also that, remember the sell side liquidity I was talking about? So everybody would expect that to be the very bottom, right? That everybody would expect that to be the support. And look, looks like people did think it was going to be the support with this candle right here. And then the next 4 hours, what did it do? Boom, went right down, took out anybody with a sell stop, right? Or anybody that had a buy limit with a very, very short stop loss. Or if they had a trailing stop loss, and then they trailed it too close, something like that, it probably came back down, hit it, knocked it out, right? So that's why these are full of liquidity, and you got to look for it. And that's why I said price seeks liquidity. Price seeks liquidity, and it seeks to balance, right? That way, the liquidity, it can take out those that are in those orders that are in the market, right? And so far, it hasn't really created any liquidity. Usually in these kind of markets, whenever you see it go up, it hit a fair value gap, bounce out, you'll see it kind of create liquidity, but not too much. You can see a little bit right here with these 4 candles. So you have, I would just draw a line right here really quickly. That I would consider liquidity, right? So then you could probably find a setup to the left to where you could, and it touches the fair value gap. At that point you could sell, and then boom, it goes right below that and knocks out that liquidity. So liquidity taken here as well, because it looks like this could have been a new support level, but as you can see, got knocked out. So but it was just before the order block, so it was respecting the order block. Again, comes up, hits another fair value gap, touches that, goes into the order. I mean, it's just back and forth between the order block and these fair value gaps. Now in the fair value gaps, as you can see, it usually kind of rushes through them, or it stays just on the outside of them. There's usually not, like, you rarely see this in fair value gaps, or just a couple candles that are just sitting in there before it actually finally makes its way out. They're usually in and out really quick, as you can see here. So this guy kind of got up in here, and well, this is what created a fair value gap, was this down candle here, and then this down candle here. So these two, and then this one kind of floats up, as you can see, to the top of the fair value gap, and drops again, and it drops on top of the fair value gap, and now it's just kind of stuck. Everything is Bitcoin Cash, I swear, it's stuck. It's stuck in between just fair value gaps. So it doesn't know it. There needs to be some kind of push, some kind of news, something exciting for Bitcoin Cash to move. Because I mean, just looking at it on the 4-hour chart, there's really nothing hopeful about it. I don't see really anything. So that's why I put the Fibonacci on it, to see what could possibly happen, if there could. because the institutional traders, the traders that we try to emulate or try to understand the algorithm along with them, so we can trade with them and make money with them instead of them taking our money. Generally what they want to see is they want to see the price get below the 61.8, right? And then, maybe near the 100. The reason why is because that is a huge discount if they caught this right here, especially if they were the ones who, pushed down, cleared out this buy side liquidity, and then bought at the very bottom. So they could have sold, and then dropped the hammer, and sold all the assets, and then, shorted it really quickly. And then, as soon as it got through and broke the liquidity, took all the profits, and then turned around and went the other way. That's exactly what institutional trader would have done. Somebody in some kind of large institution, it's exactly what they would have done. But what this is down here, this last down candle, right? This is considered a breaker, right? And this would be also acting as support if price ever gets down to this level. The reason why is because we have a high here, right? This is more like a a swing high, midterm high, low, and then we have a higher high. So this is just part of the algorithm. Because of that, whenever you see these, and there's probably quite a few in here actually, then this becomes the breaker. So if price ever does finally break down first, we do have a small 4-hour fair value gap that it would have to go through, which would probably be fairly easy, especially if we had some kind of news, to bring it down. It wouldn't be hard for it to just drive right through that. Or you may see it, go through it, pull back up, and then drive through it, and then until it hits the breaker, and then once it hits the breaker, it would finally probably go the other way. And that's what I would be betting on. So if I were anybody, it's just my opinion. I am not a broker. I am not a financial advisor. I'd probably set a limit, right here at the top of this breaker, which is at 467.80. I know it's not a number people want to hear, but it could get you a lot more bang for your buck, especially if you're going to wait, for it to get there. And if you have the cash for it to wait, put a buy limit in there for that amount at that point, and just wait to see if it's going to get down there and hit that, because I think it will eventually. I don't think it being in this area is doing it any good, and nothing's gonna come out of this for Bitcoin Cash. And like I said, it's trying to seek liquidity, but evidently there may not be much liquidity in this market right now. Everybody just may be holding, and nobody's really putting in orders. So that could also be a big issue with what's going on with Bitcoin Cash. So anyways, that is it for me today for Bitcoin Cash. I thought that would be an interesting one for you. If you enjoyed it and you thought you learned something from this, or you got something out of it, you learned something about smart money, something like that, you can please give it a like, please subscribe to my channel. I do a lot of these for a lot of different assets. I'm trying to think about which one to do next. Maybe Harmony. I'm not for sure. I just did Bitcoin and Ethereum again. Those are the ones I'm going to be doing a lot of, because I know we want to see a lot of them. I'm trying to think of some other ones to do. I've already done Polkadot, Cardano, quite a few last weekend. And you can kind of see, how they've played out this past week. So I'll try to keep it up, but thanks a lot for watching, and for all of you that are out there, always remember to keep your pants on.